in working capital management. The next important aspect called credit policy, also called credit granting decision. What do you mean by credit granting decision? Whether we have to grant credit or not. Whether we have to grant credit or not. That is called credit granting decision. கடனுக்கு வியாபாரம் பண்ணலாமா வேண்டாமா? Okay, that is called credit granting decision. So, if you want to grant credit கொடுக்குற வியாபாரம் பண்றோம், then what and all we have to consider for the purpose of granting credit? என்ன கன்சிடர் பண்ணணும்? If you want to grant credit, what we have to consider, Kanna?
The credit worthiness of the party.
Yes, credit worthiness of the party. Next. What else?
Credit periods.
Okay. Next. What else you have to verify? You can chat also no, quickly. I want to grant credit. Credit grant அர்த்தம் கடனுக்கு வியாபாரம் பண்ணலாமா இல்லையா? Okay. There are two types of sales. One cash and carry basis. You can pay the cash and what? Get the product. Another one is credit sales. So here our worry is with respect to what? Whether we can grant credit or not. Yes. Sonu sir is telling interest rate you have to verify. Security you have to. Credit period you have to analyze. Good. Prem Kumar, very good. What? Bad debts you have to identify. Okay, expected bad debts. Very nice. Good. Security against credit. Okay. Very good, Mahendra. What about others? Good response. In compared to yesterday, today, nice response. Good. What else? Girija.
Sir, with respect to quality, reputation and goodwill in the society.
For whom? Giver or buyer?
To whom the credit is given? The customer.
Yes, customer. Very good. To whom I am going to give? For that customer, credit worthiness of the customer. If he is a fraud, how can I able to give the credit? Am I right? So, many things you have to analyze. This aspect is called credit granting decision, also called credit policy. With respect to credit policy, frequently asked question, 7 to 10 mark you can expect out of this particular topic or this particular segment. This time, minimum 7 mark, maximum 10 mark out of this particular segment. Credit granting decision. Before you are going to grant credit, always we have to analyze cost benefit analysis. How much the cost involved for the sale and how much the benefit out of credit. Both you have to identify. Now, with respect to benefit, Priyadarshini, can you please tell me what is the benefit if I go for credit granting decision? கடனுக்கு வியாபாரம் பண்ண என்ன பெனிஃபிட் கண்ணா?
Interest.
No. Next others. If I am going to grant credit sales, what could be the benefit? எதுக்காக credit வாங்கணும்?
Sir.
Yes.
Sales volume will increase, sir.
Very good, Girija. Okay. I am granting credit. Then what would be the expectation? Sales will get increase. Am I right? Any business for that matter. I am conducting coaching class. Here, yes, Kana. Here, instead of paying the entire amount fee, you can pay installment. It is equal to credit period only, no? Okay. Then what is the intention begin the same so that more admission will be there. I am selling the product. Today you can buy the product. On or before 30th day, you have to settle the money. Then what? Many customer I can get. So that ultimately sales will get increase. Whenever you come across credit granting decision, the important terminology, for example, 2 by 10, comma, net 40. 2 by 10, comma, net 40. Before that, what is called net 40? Many occasion, past exam question, MTP, RTP, including past exam question, we have come across. Sometime net 40. Number is not important, maybe 40 or 30, okay? Or 2 by 10 or 3 by 15, something will be there, okay? So, first we can discuss what is called a net 40. Harish. Question have you seen this question or not? Nobody test RTP, MTP, past exam questions, including our ICA material is there. What do you mean by net 40?
Like after tax.
No, Rakana, what is this Priyadashini? We are talking about the credit sales pathina question.
Discount.
No.
And credit period.
Net 40. No. 40% discount is
Days, sir.
Prem Kumar. Very good. Yeah, Prem Kumar answer is correct. Prem Kumar. Very good, Kana. Your full answer is correct. Clear? Others also kindly text to participate. So, net 40 represent what? Today you can purchase the product. On or before 40th day you have to settle the money. 40 நாளுக்கு கடன் பீரியட் சொல்றோம். கடனுக்கு வியாபாரம் பண்றோம். எப்ப செட்டில் பண்ணனும் தெரியும் இல்லையா? I am granting credit sales. When you have to repay, that period is called net 40. It may be net 40 or net 60 or net 50 depending upon the competition. If I am granting net 40, my competitor is giving net 50, where the customer will go? My place or competitor's place?
Net 50.
His place.
Competitor's place, because 50 days credit period, I am giving only 40 days. Therefore, based on prevailing market trend, I have to fix the credit period. Are you with me or not? Understood? So, you understood what is called a net to 40. Now, extending the terminology. Okay? Prem Kaur already told the answer. Others also can try. 2 by 10 net 40. This is the meaning. Because many students, for your kind information, many students, because of this one line item, not even full line, because of this segment 2 by 10 net 40, he is not able to understand what is that meaning. The entire problem he is not able to attend in the exam. Pathetic. For 10 marks, since you are not strong in the concept, you are going to lose the entire 10 marks. The entire problem you are going to omit. So conceptually you should be strong. So 2 by 10 net 40 represent what? What, Sukumar? You are in happy mood. Tell me. 2 by 10 net 40 represent what? Unnum padikala. What is this?
Sir, if settle within 10 days, then 2% discount we given.
Very good, Kana. Kadambari. Keep it up. 2 by 10 net 40 represent. Today you can buy the product on or before when you have to pay the money? 40 days, okay, is a credit period. But if you are going to pay money, if you are going to settle the amount, within 10 days, I'll give 2% discount. So, I am attracting the customer to settle the money at the earliest so that my liquidity position, company's liquidity position is going to increase, improve. Understood or not? All of you? Now, 2% represent what? 2% represent what?
Discount.
Cash discount.
Discount. You know, very good, Mahendra. There are two discounts are there. One is called cash discount, another one is called trade discount. One is called trade discount, another one is called cash discount. Okay? Sukumar, what is the difference between trade discount and cash discount? What is the difference between trade discount and cash discount? Moni.
Trade is will be given on volume basis.
Okay. Which one, Sriraam?
Cash discount will be given on cash basis.
Little better answer. Yes. Others also. Aishwarya. K. Aishwarya.
Sir, trade discount is given at the time of sales, sir. Cash discount is given at the time of the payment.
Very good, Girija. Trade discount. Trade discount normally we come across in many places as a customer. We are buying the product. Suppose you are going to purchase during Diwali purchase. to buy. Assume I'm going to Pothys. I want to purchase the product. After buying saree for my wife, total bill amount comes to, other items and all purchase, total bill amount comes to 3,700. In the cash counter, they'll give advice. What advice? You may also come across.
If you buy another saree, you can
get
this thing free.
So, he will give the advice. What advice? Sir, your bill amount 3,700, sir. You won't enter the bill. Sir, if the bill amount cross 4,000 and above, or if you are touched 4,000, you will get 10% discount, sir. Am I right? Some discount policy will tell. Immediately, as a chartered accountant, will calculate. Already, how much you have to pay? 3,700. How much extra I have to pay? 300. If I am going to pay 300, it becomes 4,000. Yeah? Then how much the discount? 10%. Therefore, how much the savings? 400. After 300 pay panna, 400 benefit kanikkudu. It's a beneficial for me or not? Yes or no? So, based on this calculation, you want to buy something. Any product will be there for 300 rupees. Clear? So, you land up with buying another 1,000 rupees with the product. Am I right or not? Indirectly, they are influencing to buy the product from this particular place itself. Rather what? I have purchased saree for my wife. Anyway, I have to purchase dress for me. Instead of going to some other shop, I may have the plan to buy it in some other shop. Put it to buy it here itself. So then I can get some discount. No. Am I right or not? So, indirectly, they want to improve the turnover. Sales they want to improve. For that purpose, they'll give some discount. So, over and above 2,000. Now, what is 2,000? Nothing. Am I right? Over and above what? 5,000, 4,000, 10% discount. Suppose you above 6,000, okay, you will get about 20% discount. Say we tempted to buy one, why don't you buy all the product here itself so that we can get 20% discount? No. Clear? So they want to improve the turnover. For that purpose, discount they will provide. That discounts are called trade discount. Trade la pandra discount. That's why it's called trade discount, to improve the trade, improve the sales. But here we are going to discuss about cash discount. Rightly, Mahendra has pointed out. What is called cash discount? Cash discount applicable only only for the purpose of what? Credit sales. For the purpose of repayment. For the purpose of inducing the customer to pay well in advance. We are going to provide cash discount. Normally 40 days credit period, net to 40. But if you are going to settle well in advance, within 10 days you are going to settle, you can get 2% discount. At least part of the customer may going to pay the money so that I can get the cash at the earliest. Understand logic or not? That is called one cash discount. Now coming back to original schedule. Now understood the terminology 2 by 10 net 40? All of you?
Yes, sir.
Very good, very good. Now we move to next one. We are in credit granting decision, whether you have to grant credit or not. That is what you are worrying. For that we have to do what? Cost benefit analysis. What is the cost with respect to granting credit? What is the benefit for the purpose of granting credit? Girija has pointed out benefit represents incremental sales. But if I am going to grant credit, sales will get increase or not now? Definitely will get increase. There is no doubt at all. Am I right? But increase in sales alone is not a criteria. For example, you know, in Chennai, T Nagar is there. Am I right? In platform shop, they have decided because of the Diwali season or Sankranti season, they want to provide credit sales. Today you can buy, on or before 1 week you can settle the money. Who is granting credit? Who is following the policy? Platform shop. Then will the sales will get increase or not?
It will increase.
Increase.
Yes, sir.
Definitely all the shops are stock out. Am I right? But anybody going to pay the money?
No.
Anybody will repay the money? Nobody will repay. Am I right or not?
No, sir.
Therefore, increase in sales alone is not the criteria. Ultimately, what is important?
Recovery.
Increase in profit is the criteria. Ultimately, before granting credit, how much the profit? After granting credit, whether profit increase or not? Ultimately, businessman point of view, take home profit is increased or not. That only you have to worry. Am I right or not? Therefore, here benefit represent one incremental profit. Benefit represent profit. Are you with me or not? All of you? 10.
Yes, sir.
So one hand benefit nothing but profit has to increase. Another hand we have to incur a cost. Here we are going in ICA material, we are having two important costs they have mentioned. Based on that only the frequently asked questions are there. What are all the costs if I am going to grant credit? Credit sale பண்ணா என்ன cost to the company என்னப்பா?
Opportunity cost.
Yes, Pooja. Bad debts. யார் சொன்னா பண்ணணும் யாரும்? Somebody said the opportunity cost. Who said? Kadambari, huh?
Yes.
Okay, yes. The second one is called one opportunity cost. Okay? Two things are there. One is bad debts, another one is called opportunity cost. Now, bad debts, unavoidable one, right? One or two customers, they may not going to pay, 1% or 2%. Whenever I am going for the credit sales, credit granting decision, I have to mentally prepare for one, some bad debts. Some normal loss will be there. We can't expect all the customers are genuine customer. Okay? Some customer like Girija may not going to pay the money also. Am I right or Girija? Now, next one. Another one is called what? Opportunity cost. Here, what is called the opportunity cost? Kadambari, can you please tell me what do you mean by opportunity cost?
Sir, if the customer has paid the money right then itself, it could be used for other purposes.
Please have a big hand. Very good. Priyanka, clap பண்ண மாட்டேன். பொறாம பிடிச்ச பொண்ணு. If you are going to settle the money now itself, I can use it for some other purpose. That opportunity I am losing. That's why it's called the opportunity cost. You know the definition for the opportunity cost, you would have studied in costing paper, right? Group 1 costing. Value of sacrifice made or opportunity forgone in accepting the alternative course of action. That is next best alternative is called opportunity cost. Now, if you are going to pay the money now itself instead of 40 days credit period, then I can use the money now, I can invest the money, I can get some benefit. That loss I am incurring because of one granting credit. Or today 1 lakh worth of product I am selling, 1 lakh rupees worth of product. If you are going to pay the money 1 lakh today itself, I can put it in fixed deposit or I can put it in bank, I can get some interest. Am I right? After 40 days, then I have to lose that interest. That interest component or return on investment component is called one opportunity cost for me. Understand? All of you? Therefore, we have discussed two costs. What are the two costs? Rent cost discuss பண்ணோம். என்ன பார்த்தோம்?
Bad debts.
Bad debts. Another one is called
Bad debts and opportunity.
opportunity cost. And one benefit. What is the one benefit?
Increase in profit.
Increase in profit. Am I right? So benefit is greater than cost means we can grant the credit. The benefit is not greater than, benefit is less than what cost is high, benefit is less mean we no need to grant credit at all. Understand? Are you with me? Now, note it down.
Yes, sir.
Credit granting decision, kindly note it down. Credit granting decision. That is whether credit sale is viable or not. That is called credit granting decision. That is whether credit sales is viable or not. Before granting credit, before granting credit, we have to do cost benefit analysis. We have to do cost benefit analysis. Benefit represent incremental profit because of credit granting decision. Incremental profit because of credit granting decision. Underneath you can note it down. Sales minus variable cost is equal to, underneath you can note it down, sales minus variable cost is equal to Sundaresan, what is it called? Sales minus variable cost is called what, Kannan?
Contribution.
Yes,
Contribution.
contribution. Less fixed cost is equal to less fixed cost is equal to what is it called?
Profit.
Profit. Okay. Are you with me? Good. Come on. Now, next line item we can note it down. Note. Next line item we can note it down. Note. If fixed costs remain constant, irrespective of the credit period, if fixed costs remain constant irrespective of the credit period, then fixed costs are irrelevant costs. Fixed costs are irrelevant costs for decision making. Therefore, contribution is itself considered as benefit. Contribution is itself considered as a benefit. Understand? Note number 2. If there is a change in fixed cost, due to change in credit period, then fixed cost also relevant cost. Fixed cost also relevant cost for decision making. Therefore, profit is the criteria for decision making. Profit is the criteria for decision making. Understood? So in examination, credit policy will be there. Okay, credit granting decision, 30 days credit, 40 days credit, 80 days credit, and 120 days credit. Which credit policy is preferable? They'll ask. In this juncture, you have to do cost benefit analysis. Benefit represent in general incremental profit. Fixed cost irrespective of the policy to remain constant means it should be supposed to be constant. Right? General constant. If it is constant mean, then contribution itself sufficient. Sales minus variable cost contribution. Where we are getting more contribution, you have to verify. Suppose fixed cost also changed because of what credit granting decision. Then fixed cost also relevant cost. Then sales minus variable cost is equal to contribution minus fixed cost is equal to profit. Profit is a benefit for you, not contribution alone. Now got the idea or not? Because many students getting confusion. Few problems they are taking contribution as a benefit, and a few problems they are taking profit is a benefit. Student getting the confusion. Why profit is a criteria for one problem, another problem is why contribution. Now you got the clarity? All of you. Next point you can note it down. You know cost. Enna cost pathom? Two costs we come across. What and all?
Bad debts and
Bad debts
opportunity
and
cost.
opportunity cost. Okay. With respect to bad debts and opportunity cost, first, bad debts has to be calculated. Bad debt has to be calculated based on sales, percentage on sales. So in examination, they will give the percentage. 40 days credit period, 5% is the bad debts, expected bad debts. In case of 60 days credit period, 7% is the bad debt. 120 days credit period, 10% may be the expected bad debts. That percentage 5 or 7 or 10 you have to apply on sales turnover. Apply on. Or if you are not on turnover, you have to apply. Are you comfortable? Next. Next point. Another cost. What are the next cost you have to discuss? Benefit you have discussed. Am I right? Cost number 1 you have discussed. What are the next cost? Opportunity cost. Very good, Kirija. With respect to opportunity cost, note it down. Opportunity cost lies in the Swarupa, noting down or not? Yes. Opportunity cost lies in the cost of debtor. Cost of debtor. Okay. For this purpose, if fixed costs remain constant, then we have to consider variable cost alone for the purpose of computation of cost of debtor. Whereas if fixed costs also changes or change, if fixed costs also change, then both variable cost and the fixed cost you have to consider. Both variable cost and the fixed cost you have to consider for the purpose of computation of cost of debtor. Janaki, understood? Mr. Sonu sir, comfortable? Good.
Yes, sir. Yes.
All are comfortable, Ganna? These are all the notes, you should be thorough, Ganna. Now, again, commonly committed mistake, because few problems in institute material you are going to see. For opportunity cost computation, they have considered only variable cost alone. Few problems they have considered both variable and fixed cost. Why? Depending upon fixed cost remaining constant or not. Okay? These are all the points you are supposed to remember before solving the problem based on credit granting decision. So conceptually you should be strong first. All of you understood the concept? Yes or no, Ganna?
Yes, sir.
Okay? Good. Because every topic I have given what to study. If you are going to type what to study, you will get what all the topics and what to study for the respective topic. So all the topics and what all the subtopic you have to refer. You have to pick. So in channel Excel you have given, am I right or not? So all topic level, all concept, all the concepts should be thorough. Okay? So if you are thorough with it, now you are comfortable with respect to credit granting decision. So opportunity cost. When opportunity cost will come? If you are not going to pay money, then only opportunity cost will come. Am I right? Pay pantan, there is no opportunity cost. I am granting credit. If you settle the money, there is no question of opportunity cost. If you are not settling the money, then only opportunity cost will come. If you are not settling the money still now, then you are going to be called the what? You know, panam kuduthu mudikala, settle panla. Then you are going to be called the what? Respond. If you are not going to pay the money still, settlement is not over. When you are going to be called debtor. Panam kudukanga per engappa? Debtor. Okay. Therefore, remember that opportunity cost lies in the debtor. Or if you are a debtor, opportunity cost. All the sales opportunity cost won't be there. Am I right? Only in debtor, because debtor not yet paid. Therefore, opportunity cost lies in the debtor. But debtor is based on sale value or cost value. Debtor apply complete upon sales value or cost value?
Sales, sir.
Always on sales. I sold the product, 1 lakh worth of product to Nityashree. She has not paid the money. Therefore, debtor, Nityashree debtor, worth of the debtor is 1 lakh. Am I right or not? So, always based on what? Debtor. Clear? Always based on debtor. That too based on sale value in debtor. Am I right? But with respect to opportunity cost, direct sale cost is the opportunity cost. Opportunity cost lies in the cost of the debtor, not sale value of the debtor, because sales value includes of the profit. Are you able to follow or not? Therefore, debtor is inclusive of the profit. Debtor is because debtor is based on sale value. Remove the profit, balance is equal to cost of the debtor. In that cost of the debtor, you have to apply the opportunity cost. Now got the clarity?
Yes, sir.
Okay.
Yes, sir.
So these are all the
Yes,
things
sir.
you have to remember with respect to one credit granting decision. All are comfortable with the concept behind credit granting decision?
Yes, sir.
Suruba, can you please repeat the point with respect to bad debts? Okay, bad debts are okay. Rakana. Bad debts we have to calculate on the based on sale value. Turnover கொடுத்திருப்போம். 40 days credit period, 80 days credit period, 100 days credit period, turnover will be there. Accordingly, turnover going to get increased. Respective periods, bad debts will be there. Bad debts percentage you have to apply on turnover, nothing but sales. Sales into normal computation. Sales into bad debt percentage is equal to bad debts. Percentage of bad debts is equal to bad debts. Comfortable?
Yes, thank you, sir.
So have these notes properly. Any problem, if whenever you are going to solve credit granting decision, you have to remember the notes. You have to read based on these notes only you have to solve. All are comfortable, Kanna? Good.
Yes, sir.